So hi, everyone. This is Dennis Schultz. I'm the president for New York City chapter for Blacks in Technology. If you're not familiar with Blacks in Technology, we are a national nonprofit that advocate for Blacks in Technology. We keep it simple. We want to make sure that everyone within the technology universe is aware that there are indeed African Americans who code and who practice the multiple disciplines within the technology industry, and we want to make sure that there's a place for advocacy and growth within that community. So thank you for joining us. I have with us representatives from a few different interesting venture organizations. So with me are Brandon Andrews, and I'll let Brandon introduce himself in a second. I also have Fritz Desir and Tunde, what's your last name?
Kelani.
Kelani from Republic. So this is a great panel. We have a lot of talent guys. We'll keep this format loose. What I will tell you is that because we are recording, just keep that in mind as you're asking your questions. If you don't want to be memorialized on the internet indefinitely, please feel free to ask your question in the chat. I'll ask it for you. The mics are muted by default. So if you want to ask your question verbally, just raise your hand. I'll unmute your mic. And this will be posted online after the event. So you'll get an email after the event with the link if you missed a portion of it or just want to get a replay. So with that, I'll let the panelists introduce themselves, starting with Brandon.
Hey everybody, thanks so much, Dennis, and thanks to Blacks in Tech NYC for holding this event and for being an incredible organization, bringing more diversity. One, bringing more, I think, awareness of the diversity in the tech space, but also doing its part to build the pipeline of folks getting into the space as well. Brandon Andrews, I'm an entrepreneur. I currently have a mobile app company and a consultancy. The mobile app is called Gauge, it's a market research platform. On the consultant side, I, among other things, run a nationwide casting tour for Shark Tank through our firm Values Partnerships. I meet several thousand entrepreneurs every year focused on finding more diversity, so more diverse ideas and also more diverse voices. So people like the folks on this webinar today, getting them into the pipeline for the show, and then also do some investing myself. I'm excited to be here and looking forward to the conversation.
All right, thanks, Brandon. I appreciate that. Fritz, do you want to go next?
Sure thing. Is the audio okay? Can you hear me all right, Dennis?
Yep, you're coming through clear.
So thanks again. Just piggybacking on what Brandon said, I mean, really appreciate you having and hosting us here, Dennis, and just the entire BIT group. So a bit on me, I'm a designer by training, over 19 years as an experienced designer. So essentially designing software from a feature perspective as well as functionality and interaction design perspective. I currently am associate director at Boston Consulting Group in Platinian, which is a division of BCG, and also I'm the founder and executive director of AWSM, which is a venture development organization designed to help founders and specifically underrepresented founders win. And specifically, we look at providing coaching and functional coaching around specific areas to help scale a startup. And we also provide access to capital through an investor network, as well as helping founders think through some of the aspects of, operationalizing, what they're working on. So happy to be here and look forward to fielding any questions, just based on the experience. And I should say I'm a two-time founder as well. So come at this with that experience also. So happy to be here.
All right. Thanks, Fritz. And Tunde?
Hey everybody, Tunde Kelani. Thank you, Dennis, for the invite, and for Brandon for also looping me into this. It's really great to be here, and excited to share a little bit more about the Republic platform, which is that's where I work. A little bit about me. I have a background in finance. I spent 3 years working on Wall Street in sales and trading, kind of interfacing with asset managers and hedge funds. Did that for a bit before I kind of realized that wasn't the most fulfilling work that I could possibly be doing, and wasn't really in the space that I wanted to be in. So, started looking at different opportunities, ended up at Republic, which is where I've been for a little over a year now. And Republic is an investment platform that helps connect founders who are looking for capital with investors who are looking to deploy capital. We have 3 main product line and verticals: an early stage platform, a growth stage platform, and a late stage platform. And effectively, whatever a company's capital needs are, we aim to provide a service that can help them find investment dollars. The really cool thing about it is that our early stage platform is an equity crowdfunding platform, or crowd investing is actually the term that we use, since it's a little bit different from your traditional crowdfunding. But that platform is open to all types of investors, so both accredited and non-accredited. A relatively new way for companies to raise capital, and also for investors to deploy capital. It's only been kind of operational and in existence from a legal perspective for 4 years. So the summer of 2016. So the 4-year anniversary is coming up, and in that 4 years, we've helped nearly 150 companies raise over $45 million through the funding portal. Our private arm has invested over $110 million so far into later stage companies. So really exciting growth that we're seeing here at Republic, and really awesome to be tapping into the BIT network.
Great. Well, what I want to do is start with some of the questions that were submitted to me prior to the webinar. And one of the questions is actually a good segue from your introduction, Tunde, because it was asking about the difference between crowdfunding and I guess what you said was is a slightly different or nuanced version of crowdfunding that Republic does. Can you explain that a little bit?
Yeah, totally. So the term that we have been using is crowd investing. Personally, I use the term micro angel investing, but some people have told me that that's a little bit of a mouthful. But effectively, what you have is 2 different types of things. And I think, technically speaking, both donation-based crowdfunding, which is what most people are familiar with, and crowd investing technically fall under the umbrella bucket of crowdfunding. We just use a different term because the incentives for someone to give capital in both contexts are a little bit different, and also the actions that investors or donators in the equity in the traditional crowdfunding sense, the actions that they take after are a little bit different. So when you think about donation-based crowdfunding, you're thinking about Kickstarter, Indiegogo, GoFundMe. And these are platforms where sometimes companies, other times projects, artists, different creators, people who are trying to bring something to life are reaching out to the crowd in order to solicit donations to bring it to life. But it's somewhat of a one-time kind of transaction, in the sense that, I'll give up some money to some project or to some cause. Maybe I'll receive like a t-shirt or a hat, or maybe I'll receive early access to a product if they're trying to bring something to market. But it's never a guarantee that might actually happen or occur. Effectively, it's a one-time transaction. Once it happens, I may or may not have access afterwards. And so I can kind of set it and forget it. With our platform, it's crowd investing. So what that means is, not only are you donating to a company or a startup or a project that you want to see off the ground because you believe in it, but you're also investing because you want to earn a return. Meaning, so when you come to the Republic platform, you're investing in a company, you're receiving an actual security in that company, which is the Republic CrowdSafe. We don't have to go into the intricacies of what that means, but you're receiving a promise for future equity if that company goes on to be successful. So not only have you invested, you now have upside in the company's future if the company is successful. And the reason why I mentioned that the incentives are a little bit different is one, because you have that upside, but two, afterwards, what we oftentimes see is that for companies, there's a large network effect of these investors who serve as evangelists for the company or brand advocates. So not only are they investors themselves who use a product or service, they're telling their friends and family about it. If it's a B2B company and an investor can bring that product to their company, they can serve as a lead engagement pipeline. So it really is dual faceted from a capital raising and a marketing perspective for the companies. And then for the investors, it's also kind of, it ties the company's success with your success. So if anything that you can do to help the company be successful will ultimately be to your benefit, because it increases the value of your potential exit in the future.
Nice. So I can produce a widget, and instead of having someone invest in me for said widget, they can invest in my company as a part owner.
Exactly. Yeah. So you're not just limited to what you put in. Potentially you can see a multiple return on your investment if you're picking the right companies and the companies go on to be successful.
So this is for everyone. So what's easier, the equity crowdfunding piece, or the traditional angel VC route if you're an early stage startup? Anybody have an opinion?
Yeah, I mean, I don't know if I'd say one is easier. I mean, I think it depends on what you mean by easy and like what you're working on. And I'd also say, it depends on what your level of access is, right? So I tend to not look at these things as like binaries, like, either or. It's a bit of an and. So I think, if you have access and have relationships to investors, whether it's angel or VC, I think that's important. That's an important point to consider. And I also think that as far as a crowdfunding platform or crowd investing platform, I mean, Republic is super easy. They're partners with us, and I'm like super big advocate of what they're doing, because it democratizes things. I think the key thing to think about is what problem are you actually solving, right? Like what is your startup, and what are you dedicating your life to, and what are you trying to bring to market, and how much validation do you have that there's a there, right? So sort of like early signs of traction. Obviously, if you're post revenue, that's even better. But really, I think it's going to come down to, what you're working on, what your growth metrics, even early growth metrics, what they look like, and how you can actually tell that story. Because in the end, now, you actually have access to so many different avenues, from, going on, something like Shark Tank to, Republic, or just, connecting to angels, and, which is an area that we focus quite a bit on. It still comes down to those fundamentals. So I think it's not, you know what I mean? Like it's almost, the question to me is almost like, where would you have the biggest success in terms of potentially getting funded, is how I hear it. And so I'm answering it more like that. You know what I mean? It's really about the fundamentals of your business, and can you like prove that there's value there that is easy to demonstrate. And I think, I would honestly, I would try every route you can try. Shark Tank's a little different. I'll let Brandon speak to that, because it's definitely, I think you got to have some demonstrable traction to really, make a difference there. But yeah, I mean, that's my 2 cents on it. I mean, just speaking probably more so from the angel-ish side, angel like investor network side.
Yeah, which actually is a question for Brandon. So, Brandon, if you are an early stage or our early stage startup, pre-launch, pre-revenue, are you ready for Shark Tank, or is Shark Tank just for companies that have a little bit of traction and just want to expand?
Yeah, it's a great question, Dennis. So we endeavor to show the entire spectrum of really earlier stage businesses. So think about folks that are pre-seed all the way through maybe a small Series A. Once you start getting past that, the numbers start getting too big for it to make sense for Shark Tank. But we endeavor to show the full spectrum. But the reality is we're now casting for season 12, and over the past decade, Shark Tank's just become much more competitive. And so literally in the first couple of seasons, you saw entrepreneurs come on with just a sketch on a piece of paper or just a 3D model and leave with a deal. Nowadays, that's much more difficult to do, and you very rarely, if ever, see that in the past couple of seasons. Here's what I will say: the casting process for Shark Tank is at minimum a multi-month process. So you could potentially come to Shark Tank before your product launches, or certainly pre-revenue, and pitch and say, well, I've got this user acquisition, or I've got this intellectual property, or I've got these other pieces to show traction, and say, if you are pitching us in February and you're pre-revenue, we don't film until usually June and September. So you have the opportunity to build the business, and we have the opportunity to get to know you between February and June. And certainly by the time September rolls around, unless you are building something that is, highly technical, you should usually, if you already have a business established, you should usually be able to have something that you can get into market and show some additional traction in some way by the fall. So it's very rare for people to come on at this point with just the idea and get a deal just because it's so competitive, but that shouldn't stop you from pitching, because the casting process is a longer process, because you have to go through diligence in a way that's similar to what Fritz is probably putting companies through in terms of his personal angel investing. You have to go through that, and so that gives you time as an entrepreneur to build. But it's competitive. But don't let that stop you from coming and pitching.
Yeah, no, that's encouraging. So I was always under the impression that you had to have a little bit of revenue and traction before you got up there, and now it sounds like anybody with the right idea and a little bit of forward thinking can make it. So let's stick on Shark Tank for a little bit, because I wanted to know what it actually takes to actually get there. You mentioned that it's more competitive. What does that decision process look like? How is the decision ultimately made? And how long is it from the time that, say, somebody pitches to you to the time that they hear back if they make to the next stage?
Yeah, so in a pre-COVID environment, there were 2 ways to pitch, or 3 ways to pitch. You could either submit an application online, which tens of thousands of people do every season. You could connect with a producer from the show, so someone like myself personally, and connect at an event, or connect on Instagram or however, and chat about the business. Or you could come to our casting calls, and of course, I usually do 8 to 10 casting calls all over the country. If you pitch, that's the first step in the process. We want to hear problem, solution, market opportunity, traction, and have you make an ask. Believe it or not, one of the biggest problems we have at casting calls, or just in talking to entrepreneurs about the show more generally, is people just either don't ask, or they aren't confident when they make the ask. I think there's some broader societal pieces to that. I think nerves have something to do with it, probably, especially at a pitch, at a casting call where you have other people in the room, but also there's just kind of a general unfamiliarity with investing and with this world of venture and startups and being on a venture track. And most people just don't have a reason to know anything about that, because most people aren't accredited investors. And so, prior to Shark Tank, if you're not accredited, there's no reason for you to know anything about investing in a company. And so that's why the work that Tunde and the folks at Republic are doing is so great, because, as Fritz said, it's democratizing that opportunity to not only raise capital, as an entrepreneur, but also to potentially invest as an everyday person that's not accredited, by the SEC, which is something that still needs some work from a policy perspective. But you pitch, and then the next step, if we go back and actually pitch internally. So you pitch to us through whatever channel you come in, we go back as a team and pitch internally and say, I met this person at the BIT webinar. I thought they had some potential. I'd like for them to move forward. And then there's an internal decision that's made about what group moves forward, usually on a weekly basis or so. And then from there, the next step for most people is submitting a video. So a video is a longer form pitch where you have an opportunity to tell us a little bit more about you, a little bit more about the business, show a little personality as well. And then after that, the process is really individualized. You go through patent checks and background check, and we got to know you are who you say you are, and the business does what you say it does. And at the end of that diligence process with the show, a select number of companies will get invited out to, usually in a pre-COVID environment, invited out to pitch in front of the sharks. Again, we usually film in June and September every year. With COVID, the filming, we actually don't have dates yet for filming, but season 12 is greenlit, so it's going to happen at some point as soon as the environment is healthy enough for us to do it. But that's the basic casting process. New episodes will usually air late September, early October. The season usually goes through April or May of the next year, just depending on how many episodes get picked up. The episodes don't air always in the order that they're filmed in, so you could potentially film in June and not air until May, which is something you have to think about from a business standpoint. If you're expecting to have your episode air in the fall and be able to get some significant consumer pop from that, sometimes that just doesn't work out, and that's it has nothing to do with your business and has everything to do with production. It's just a production decision. And the last thing I say is Shark Tank is very competitive, but hopefully going through the process, you'll come out better than you came, even if you end up not making it on the show. So at the events that I do pitch prep with the entrepreneurs. I usually try to have an access to capital discussion, invite the SBA, groups like BIT in to have table space and share their business resources, because I think Shark Tank, just like for everyday investors, has opened up this world of venture to people that wouldn't have any reason to know anything about it, and probably is bringing in some knowledge and information for people on the entrepreneur side. I hope that every entrepreneur leaves our process better than they came. And I guess the very last thing I'll say is that there's no penalty for applying multiple times. So if you apply one season, don't make it on, there's no penalty. You can apply the second season, you can apply a third time. Very often people apply 2 or 3 times before they make it on because it's so competitive. But I want to get more entrepreneurs of color, more African-American entrepreneurs, more women, more young people into the pipeline for our show. I think we have to be intentional about it. It's not just going to happen itself. If we leave things as they are, Shark Tank will just be a reflection of the broader VC space, which isn't particularly diverse. And so, thanks again for allowing me to be here. And I'm hoping to connect with some entrepreneurs who may be interested in season 12.
All right, so attendees, you just heard it, man. He's looking for some people for Shark Tank season 12. So we will open it up and you'll get a chance to speak directly to Brandon. But what I took away from what you said, and I took away a lot, but the biggest thing is be prepared and have a pitch that you're confident in, that you feel good, at the end asking for the next step. And
I can't stress that enough, Dennis, because the ask isn't set in stone. So again, our casting process is usually a multi-month process. So we expect your business to change between the time you pitch us in February potentially and whenever we might be filming. And honestly, we expect your evaluation to go up. But it's so important that you, as an entrepreneur, show us that you've thought about what the valuation is for my company, that you've wrapped your mind around being on a venture track. Even though Shark Tank not every business is on a traditional venture track. There's some, more lifestyle kind of businesses that are there getting investments, but you've got to convince us that you've wrapped your mind around having an investor, having someone on your cap table, having someone else that you're sharing mind space with as you're running the business. And if you come in with a pitch or an ask in particular that isn't strong, or if it's clear that you haven't thought about valuing your business, then that's going to put you in a position where you're going to be a little less competitive than others. And that doesn't always mean that your business isn't great. Sometimes it's just, if you can't make the ask to me, how can you make the ask in front of the lights to the sharks when they're ready? But I know Fritz has some great resources for entrepreneurs, and I'm of course always happy to chat offline with entrepreneurs about valuation and making the ask as well if folks have questions.
Yeah, actually, I was just about to pivot to Fritz and ask what your suggestion would be to entrepreneurs who are putting together their pitch decks and who are looking for feedback and coaching. I guess, what's the best way to make sure that they have it rock solid before they go out and present it to the world?
Well, I think, Dennis, you and I have talked, quite a bit about this. So, the key things, I can't stress how tremendous a resource we kind of have in front of us in terms of what people are posting online and the internet. There's any number of tools and resources, and we provide a few, and I tend to get involved with conversations with entrepreneurs and walk them through what are the key elements of your pitch deck and what's the story you want to tell. I think at the end of the day, though, just making sure that you're capturing the key things that investors are looking for. I think what Brandon talked about in terms of what Shark Tank's looking for is almost like literally the same things that are in the pitch deck. It's, what problem you're solving. And really, I'm just a huge proponent of aspirin grade problems and aspirin grade startups, so really thinking about who for what you're doing is an absolute like painkiller. It's not, there's no equivocating about, okay, do I need this? The pain is so great for whoever your startup is focused on that your solution is a no-brainer, and it's hard to do. But I think it's really important to kind of put yourself through the aspirin vitamin kind of test, because vitamin's great, be nice to have and so on, but I could do without it. I can miss it, not even realize I missed it, but I know I should be doing it. That's just not enough to build traction off of, especially in this environment that we're in right now. It's really thinking about who that person is, and it could be a business, it could be an individual, but I think your pitch deck has to make the case that this is aspirin, and it's aspirin for a large number of people, which is kind of your market opportunity and how much of that you think you can capture. And then the rest is just all operational details about do you have the right pieces in place to produce aspirin essentially, right, and to produce it at scale. So for me, I just like to keep things super, super simple, because I think a lot of times entrepreneurs fall in love with the idea, and then what happens is a sort of a cognitive bias that's referred to as sunk costs. Sort of like your ability to not see reason past a certain point because you've spent so much time, in some cases so much money, on a startup that you're no longer paying attention to, okay, do people really want this, and is this something that we could deliver, and is this really aspirin that we have, or do we just have some kind of interesting vitamin sort of solution? So I think I think that's important. And with that operational scalability dimension, looking at who's on your team and how are you telling the story of who's rowing what part of the boat, or who's operating what part of the machinery that cranks out the aspirin, and just kind of putting yourself through that. I recommended a book to every entrepreneur I talk to. It's called Get Backed. So it's written by, I know this too, the authors, both their first names Evan, but one is I think Evan Loomis, And yeah, it's a book that is probably less than $25. That is all about pitch decks. It's all about how to create a pitch deck, and it shows examples of pitch decks that raise money. The authors are also founders that have raised money, so it isn't just open expertise. It's grounded in something, and I would strongly recommend that. And then there's a few resources online to for you to look at that speak to how to put together pitch decks. We even have a link, I think, on our site now about the top 30 pitch decks from companies like Uber, Facebook, that sort of stuff. That can help walk people through. But at the end of the day, it always comes down to problem. Like what problem are you solving, and is your solution actually, assuming it's a real problem and a real pain for someone, that your solution is actually aspirin. The rest you could pick up, you could find. We're happy to help you with, but we can't fix that first part. Like if you're solving something that is not critical, it's just nothing you could do. The deck could look fantastic, and you keep spinning.
So start with the problem and work from there.
Yeah.
And then once you have your aspirin,
Yep.
I guess the next question is, what's gaining traction right now? I mean, what have you guys seen? And this is, a question for Tunde as well.
Yep.
What have you seen in the investment community that, seems to get a lot of buzz and energy when you start talking to investors about a particular technology or product set?
Yeah.
What's hot right now?
Yeah, well, I'll pass to Tunde. I've talked too much. Yeah, please, and he can answer the question with Republic for sure.
Yeah, I can give just a little bit of insight into some of what we've seen get funded recently. I think we've seen a large interest in healthcare, kind of very relevant, really pertinent to the climate right now. The last company to raise a full $1 million on our platform was a company that was Y Combinator backed called Delete. Which is a blood testing system that helps cancer patients kind of better target and monitor the progressions of their cancer over time, so that you can kind of curate the treatment to it. Female founder raised about $1 million last year. We also have a company whose name I am, forgive me, I'm blanking on it right now. But when I have a second, I'll take a quick look. But very relevant to kind of the COVID climate, and they've had a really successful raise in the past, I think, 3 weeks that they've been online. So healthcare is really big. I think things like there's been a larger focus from the more sophisticated segment of angels who are on our platform, looking towards companies that are working either at kind of break even or working towards break even and profitability. I think that's kind of like a macro theme within the entire industry. Valuations got a little bit stir crazy, and round sizes you're seeing in 2018 and 2019. Some of the seed rounds that were being filled were some of the largest ever. And so, people are kind of taking a step back and being a little bit more conservative. So when it comes to our platform, we're also seeing, that we're seeing a lot more questions and a lot more investors asking about, companies' cash position, how they're efficiently kind of managing cash, and what their plans are to kind of ride things out. But in terms of, so I would say those are the two biggest themes that we've seen over this kind of past 2 month period. But our traditional kind of like companies that are in the AI space, that are in the fintech space, are also kind of seeing natural attraction from investors as they traditionally do on the platform.
Okay, nice. Brandon, any thoughts on what's hot, or what kind of appeals to the sharks?
Yeah, I mean, we're really sector agnostic. Sharks are interested in businesses that have traction and that are ready to scale. I know that's not particularly helpful if folks are looking for something to focus on, but something that I can say for season 12, we're definitely always looking for good stories. And I think entrepreneurs, a significant part of entrepreneurship is being able to deal with a crisis effectively. And outside of situations like a global pandemic, those crises are internal crises. So maybe my manufacturer or my co-packer is shut down and I can't deliver on time, or maybe I have a staffing issue that's problematic, or maybe folks just aren't buying the current product and I need to pivot. But there's always these internal crises that entrepreneurs are dealing with. Now in this COVID-19 environment, during this global pandemic, we're seeing entrepreneurs respond to a big external crisis and use those same skills to pivot in some way, and sometimes pivot significantly with the business. And so really looking for interesting stories there. In addition to businesses that have traction and that are ready to scale, it's how have you responded to the past couple of months, or have you responded at all? And what kind of business response have you seen? And it doesn't always have to be a positive thing. Sometimes you have to try a couple of things before you figure out what works. Sometimes you have to get on the path to eventually get to the solution. But outside of folks that have some traction, just interested in what those interesting stories are. And I'm sure that there are a lot of them out there, because despite what we hear, especially about Black businesses, missing out on PPP, and I've already not having been in the strongest positions for it with a number of metrics. I know there's a lot of entrepreneurs that are out there that are still fighting every day, and that have found ways to pivot and found ways to even potentially bring in more revenue during this time by making the right change and going after a new audience.
Well said. We have just about 15-20 minutes left. So what I'm going to do is I am going to open it up to questions from the attendees, and Simon already has his hand up for a question. So Simon, if you want to go ahead and ask your question, I'm going to unmute everybody else and make everyone available to talk. So if you want to ask a question, just raise your hand. I'll call on you. And actually, we're going to go Simon and then Mazi. You can ask your question, but go for it.
Hi, everyone. Yeah, my name is Simon Adeji. I'm with BlackPay. BlackPay is, we just came up with a new platform, which is an AI paid attention social payment platform. And my question is actually directed to Tunde from Republic. One of the things we were looking into Republic, but one of the things we were concerned about was the cap table. And once the investment comes through, what will be the categorization or the name that would be on our cap table? Because we would rather prefer to have just Republic and every other person that has invested through Republic, rather than having tens of thousands of people being on our cap table. That's pretty much what my question is.
Yeah, that's a great question, and one that I get basically every day when I and communicating and kind of talking to founders and educating them on our platform. So at a high level, what we use, our most common instrument, and Republic, we can facilitate all types of raises, from equity, like straight equity raises, to safes, to simple debt, revenue share, and profit share. But our most common equity financing instrument is called a crowd safe. If you're familiar with the Y Combinator safe, simple agreement for future equity, then it's really easy to kind of understand how the crowd safe works. But effectively, it's just a safe that aggregates, it does three things. It aggregates all investors into a single line item on the cap table. So whether you have 5,000 investors or 5 investors, it doesn't matter. They all basically get aggregated, sit as one line item on the cap table, and appears as if one investor had written you one large check. 2, for smaller investors and smaller check sizes, it minimizes their voting and information rights, because we understand that, it's kind of it's somewhat of a trade-off for an investor writing, a small $100 check into a round that they can get early into, versus someone who's writing a $50,000 check and is taking a little bit more of that capital risk. So for the benefits of kind of minimizing the voting and information rights of smaller investors is that it makes it easy to actually manage the investors on an ongoing basis, so that you don't have to sit there and have, you know, hundreds or thousands of investors in your inbox asking about what's happening with their money or with the company. And then the final difference between the traditional safe and our crowd safe is that is really around the conversion. So with the traditional safe and also with the traditional convertible note, these instruments would normally convert upon the next qualified financing event. Basically, the way that these instruments work, you can write in a trigger for them to be whatever you'd like it to be. But the most traditional and common trigger is the next time the company goes out to raise another round of capital. With the Republic Crowd Safe, it only converts upon a liquidity event. So some type of event where all investors would be able to receive their money back, whether it's a positive return or a negative. So think about an acquisition, a merger, a change in control, and of course the what most companies are striving for, which is an IPO. Those are the main four kind of trigger events that would convert a crowd safe holder from just the holder of the safe into an equity holder that would sit on your cap table. So for those kind of three reasons, you know, it's very founder friendly. You can really focus on just bringing in the capital and using it to operate your business and to execute, rather than being worried about how it's going to look to future investors down the line when you're raising additional capital, or having to spend, you know, majority of your time managing all of these different investors.
Yeah, just one last part of it. Is there like a buyback option to that?
You could write that into the crowd safe. We would have to structure that into the crowd safe up front. But it's not written in de facto, but it's definitely possible for us to work with our securities attorneys to structure it however you'd like it.
All right, thank you.
Okay. So I'll ask Mozzie's question. It was put into the Q&A, and it says, I presume a balanced pitch is best, but still I'm curious, what are your thoughts about leaning into one strong suit, say maybe a designer, really elevates the value from a perspective of a design, whereas an engineering, you know, all with at least some general knowledge of other domains, especially how to make money. So I'm not sure if that's more of a question or a statement. Mozzie, did you want to elaborate on that question?
Hey, yeah, I actually was able to glean what I needed from the discussion. I had tried to follow up over email, but thank you though.
Okay, great, thank you.
I think just for others on the webinar though, every entrepreneur, every team, you should just be yourself, and so you do want to have. There are a few boxes that you definitely want to check from a pitch standpoint, but if there's one area that you're stronger in and you feel like that area is going to be some kind of force multiplier for you from a business perspective, then you know, no problem with leaning into that if it's something that's going to be helpful for the business.
Anyone else have questions for the panel? Well, while you're thinking, I'm going to ask another one. So what's more important? Is the idea or the founder the most important factor when considering early stage investing? Don't say both. That's not.
I'll jump in. I mean, in my experience, you know, when I started my first startup, you know, a good time ago, you know, investors said to me that smart investors invest in jockeys, not horses, right? And I think, and that's always stayed with me. And it basically just speaks to, you know, if you're investing in a smart, values-driven, hungry team, they can pivot, they can come up, you know, ideas, you know, sometimes just don't work out or parts of them don't work out. But if you have the right team, they can figure out a way to be resourceful within that. So I think for me, what I've seen is that it really depends on the proximity that you have to the investor. So if you're talking like angels, you know, right now they're going to understand that what you're giving to them is probably a bit early and it will change. So they're going to be looking a little bit more at who you are and what you've been able to pull off. How long has your team been together? I think Brandon alluded a little bit to this in his conversation, but you know, this idea of like internal friction and challenges that can sometimes derail is important. You know, how co-founders get along, how you manage work, how, you know, how you're tracking, you know, performance, you know, all of these things are super important. So I think angels tend to look at team dynamics. I mean, of course they look at the problem you're solving and the business you're in, but in the end, it's like, okay, should they be wrong about this, or should they need to shift, or should they need to go somewhere, you know, with this, these are the right people. VCs, at least the ones that I know, speak, you know, look at it more from a problem standpoint. Like, are you solving a big enough problem, and the aspirin solution that you have is substantial, and it's actually a, you know, a blind spot, or it's an area that is really ownable. What they tend to look at is, are the people we're talking to the same people that can take this business to $100 million a year, you know, annual recurring revenue business, right? And a lot of entrepreneurs don't even look at themselves that way. They like to think that, yeah, I can take it, you know, to 100, 200, to, you know, I can, you know, even though they've never done it before. And so, and it takes a specific skill set. And so those investors tend to think about, you know, how soon before I have to replace this person that's pitching me, right? Or that I have to add, you know, something to them to actually help them get their business there. So, you know, the way a sort of a Mark Zuckerberg added like Sheryl Sandberg, right? That's a classic scenario of like an engineer that had something that had traction, that was growing, and then grew beyond just, okay, how do we keep the servers running, into like, okay, how do we make this an actual revenue generating business? And, you know, they just brought in someone that could do that. So if you're like engineering heavy, you could do that sort of thing. You know, like if you're technical, you could get away with that, because it's hard to replace a technical founder that has vision to scale a product. But if you're not, it just becomes a little tricky. So that's what I've seen. I think it flips a little bit with VCs. They'll look more at problem and solution, and then think that the team is maybe, you know, interchangeable, can be moved around. You know, people can, you know, they think a little bit looser. At least the ones that I know. Angel's a little different, just because of the stage. So.
Yeah. I think this next question probably lends itself to you too, Fritz, but any of you guys can jump in and answer it. It's from Joseph. He wants to know, he's not very familiar with startups, but he wants to know how to be a stellar investor, asking about things to read, certifications to get, ways that he can inform himself, you know, blogs, news, to stay aware of investment trends and get that ever elusive deal flow. Trying to find
right. Right. So you're trying to be an angel investor, like trying to invest his own money.
Joseph, do you wanna elaborate?
As of now, not particularly being an angel investor, just Mike's. I have some past private equity experience and have done some like work around investments in industrials and healthcare. And so understanding things from that perspective, I've come to hear is like very different from what you all are discussing about. So I was curious kind of how to, you know, shift and reorient my experience to get a better understanding of this side of the investment stuff. Yeah.
Right. You mean to be an actual like manager of funds, like manager of other people's money to invest in startups?
I'm assuming so. That's what it sounds like. Yeah.
Oh, okay. Okay. Yeah. So no, there's actually quite a few really good resources. You know, my thought on it as like a first time money manager, especially in this environment, is really to try to start start wherever you can and start small. A book that comes to mind by Jason Calacanis, it's called Angel, I believe. I think it's just called Angel. And there's another one by David Rose that talks about angel investing. But even if it's not your own money, I would start to look at just how to invest, but in small ways, like other people's money in ideas, or and doing it one startup at a time. Like, I wouldn't recommend trying to build a fund, or at least not in this current environment. It's more of like, how can you, another good way is actually even looking at becoming a venture scout. So you can leverage your experience and help VCs find deals that they just would not be able to find, whether it's, because of their access to the startups, or geographic, differences. So, to me, like, your job as even a fund manager is really trying to think about how can you create your own unique source of deal flow. Like what, like that to me is the bigger thing. And then the books I mentioned, and I'm happy to chat offline about how to do diligence, in startups, and how to think about, is the startup really onto something or not? That's not as hard. The harder part is the capital formation, is really thinking about, okay, how can I show people that I have an eye, and that I can actually spot value, and that I actually have a unique access to, to deal flow in some way, so I can get them there earlier and before others. So, I mean, that's my 2 cents on it.
One of the things that that Jason Calacanis mentions in Angel is Angelus specifically, and you can go on basically for a small amount of money, join up, be a part of a syndicate, and you don't have to necessarily invest that money, but you can get access to the deals. And his suggestion is to basically play like fantasy baseball or football, where you hedge on, a few different businesses, kind of watch it, see how you did. And once you get comfortable with the process, start putting real money in.
Yeah, and I'll just add to that, because, it's funny that you mentioned AngelList. So Republic actually is an AngelList spinout. So our CEO was general counsel there before he got some seed funding, and left to kind of open up access to angel investing to regular everyday people. So, I think AngelList is a great resource to gain deal flow. The minimums there might not be as accessible for kind of people who are just starting out, unless you have a good amount of capital. So, alongside, like, as you're kind of reading Angels and all these different resources, you want to start to kind of test out some of the theories. I think Republic is a great way to get a little bit of skin in the game, where you can do $100, $250 into different deals. You could build up a portfolio of 10, 20 companies and see how those start to play out. But the main thing that you can do is you can apply the principles that you're learning in some of these books when you're diligencing companies and founders and opportunities. And then you can keep track of how these companies are doing. Like, are they raising additional capital afterwards? Are they pivoting and having to change their idea? Did I pick right? Is the founder kind of, still the person that I thought they were? So I think Angels is a really good book. The other one that I would recommend is Venture Deals by Brad Feld, who's one of the co-founders of Techstars. I think it's also a great resource.
Nice. So we're just at 7:30. Do we have one more question from anybody in the audience?
Just trying to find out if Tunde is able to share his email so we can reach out to him.
Oh, yeah, definitely. So my email is tunde@republic.co. So just my first name @republic.co.
And I'll send out information to everyone who's attended as far as the follow-up. There'll be a survey for feedback, as well as the contact information for the folks on the call. I encourage you to stay in contact, connect with folks on LinkedIn, including myself. The website for Blacks in Technology is bipnyc.org, and that's where you'll be able to go and get a replay of this, as well as connect with me directly. So with that, if there are no other questions, I want to thank all of our panelists for attending and taking time out of their busy schedule to share with us their expertise. And for the attendees, thank you guys for being attentive and asking some great questions. I do appreciate it and hope to see you in the future. All right.
Righty.
Thank you. Thank you.
Thank you.
Later.
Thank you. See y'all.
Thank you.